First report, item 30, which is a chair's report, which is me. I'll also ask Mike Luley to come up to the table. So this is a report back on meetings that myself, the Mayor and Mike had in London, and also Mike had meetings in Singapore. The main focus really was meeting with the insurance market in London, and we met with a range of reinsurers, underwriters at Lloyd's, innovation teams, as well as having half a day with RMS, who are specialists in risk modelling. It was very, very detailed and interesting conversations about where the insurance market is going, how they view Christchurch, where the innovation is coming in insurance. And then Mike got to go to Singapore and meet with the Monetary Authority of Singapore, who are the regulators for the insurance market in Singapore, who are also looking at alternative insurance coverage options, and he had a conversation with them. Mike, would you like to add anything to that?
No, that's a fairly good summary. I think that the report does highlight our approach to current approach to insurance, and for particularly the way we insure above and below ground assets, and probably opportunities really to look differently at the way we insure our underground assets and approach different sources of risk capital. So that really is the thrust of the report.
Mm-hmm. Yeah, I mean, a couple of examples that we were presented with. The City of Istanbul insuring for earthquake risk rather than insuring building by building. They've insured particular areas. So they put in trigger points for certain strengths of earthquake and ground movement in particular areas, and then spread that out away from what they see as the central risk points. So, and they're packaged into an insurance security, which is then sold through the capital markets. So it's more a risk-based approach rather than a particular building-by-building approach. There was a US train company who had a lot of train tracks going through areas where they were potentially exposed to flooding or wildfires. And again, so they're insuring for those particular risks as opposed to insuring the tracks, because you can be a lot more specific about where you want to insure and what for. So there's a real shift in the insurance market to looking at a better understanding of probable loss, annual average losses, and what your risks actually are, rather than just saying you have a building, insure it for replacement cost. So that's really kind of the thrust of it. So yep. The London market is looking at that quite strongly, and they're developing regulatory frameworks to issue those securities. They've traditionally been issued out of places like Bermuda. A lot of capital market investors, pension funds, are not that thrilled about investing into structures based out of Bermuda, so they want them in sort of more well-known and credible regulatory regimes. So there's a lot of work going on there. Phil.
Thank you, Raf and Mike. My question, Mike, and thank you, was the Singapore government as an example, given that my understanding is most of Singapore is the city. So in terms of their government incentivising that, I'm just wondering if you might be able to give us some more information about the possibilities there, yeah, as a comparison.
Yeah. So what Singapore is doing is looking at Asia as a whole, and understanding that there's a real protection gap across Asia between what they are expected to lose through a natural hazard event and what they're actually covered for. So they're really focused on their role within the region, the wider Asia region, and that includes Australia and New Zealand. And they are setting up the regulatory regime to attract investment from capital markets and provide alternatives to capital for governments, for agencies, for business, so that protection gap is reduced. So they're incentivising it to the extent that between now and the end of December 2020, the government will cover up to $2 million worth of your of an organisation's costs for setting up an ILS type scheme. So that would be, a fairly compelling reason to do that. And so those sorts of costs range from legal costs, brokering costs, modelling costs, and those sorts of things. And they would be available to us if we decided that that was the right thing for us to do.
Okay. Thanks, Mike.
Yep.
I've got Leanne and then Andrew, Dion, Glenn.
I guess it's a bit more broad across both the chair having written the report and Mike as well. But it seems to me that this isn't just about insurance, but it's also about making our investment decisions around resilience in terms of what we embed into our infrastructure, because there isn't every item that we are able to insure anyway, and that's made very clear, and it's actually called out in this report, which I think is very useful from a public perspective as well. But in terms of helping us identify what risk we hold on to, what risk we can mitigate against, and what and the quantum in terms of what's available for that, and what the benefits are against the third part, which is the risk transfer. And I think that certainly I felt at the meetings that people were wanting to have a way more sophisticated conversation about the interreactions between resilience investment decisions and the risk transfer decisions and the types of products that are available.
Yeah, absolutely. And if you look at the resolutions we've got, it's really asking ELT to look at a broader risk and resilience framework for asset management as part of the LTP.
Yep.
And what came out of the London meeting, I mean, when you look at the central banks, for example, in Europe, they're all focused around climate risk. The insurers are focused around climate risk. So we've had a world where we've always insured particular assets. Now everyone is insuring for particular outcomes. But also when they're looking at what you're building, they want to know actually what are the risks around that. So obviously we know, coastal issues, but how you manage your sewerage systems, all of this stuff is feeding into their risk modelling. So actually if you get your infrastructure development right, you're going to reduce your risk.
Yeah.
Therefore you reduce any premium you have to pay to cover that risk and transfer that risk. So it's going, for the next LTP, I think that has to be very much an important framework. Whereas in the old days we just replaced stuff. We didn't think about what might happen in 30 years in terms of the changing climate and environment. So that was definitely very strong feedback, and they're very advanced. A lot of the pension funds are looking closely at that. And the reason why the capital markets are interested in investing in the ILS market, so basically being on the other side, is actually they're looking for diversification. So these markets are completely uncorrelated to normal stock and bond markets. So they're quite keen just to have some money parked in this area. Andrew?
Thank you. This is a good piece of work, or more to the point, it's the beginning of what could be a very good piece of work, I think. And thanks to everybody involved in getting the conversation to this point so that we are able to have some sensible discourse about it today. Referring to paragraph 4.11 in the report, our ongoing work in upgrading the quality of our asset data through our asset management improvement programme was also welcomed. Now that we've had these conversations, and now that we're requesting, assuming these resolutions pass, this particular focus, is there something that flows through into the asset management improvement programme that would change the priorities or the timing or the way that we're running that programme? That was the first question. And the second question, given the comments about New Zealand as a whole, we're approaching this as a city. Should we actually be attempting to lift this up to be a national conversation, given that if I was sitting in London or Singapore, I would be looking at New Zealand, probably with limited knowledge, and looking at a couple of small islands at the far end of the earth, and be keen to look at it as a nation rather than as Christchurch just as a city?
I can answer that. Yep. So thinking about asset priorities, there is a real... the answer to the question is yes, this will flow into the way the organisation should be presenting choices around investment in infrastructure, particularly around disaster risk reduction in the next LTP. My view is that there's a lot of really good work being done in the organisation around the asset assessment intervention framework, understanding condition, understanding criticality, and probably the next level for us is to present those choices in the way Mayor Dalzell just articulated them. If you've got $100 to spend, what proportion of that $100 is spent on reducing your risk? How much do you spend transferring it, and how much should we spend, or how much do we rely on our balance sheet? So I don't think in the past we've been that sophisticated in the way that those choices have been presented, I think the organisation is, with the work that it's got underway and the understanding of its assets, well positioned to do that for 2021. But going back to your second question, which is around the national conversation, this is part of a wider national conversation. And when you look, when we were in the meeting with Lloyd's, the nervousness that underwriters articulated, particularly around the way they've been they've been affected by the Wellington Kaikoura earthquakes. Buildings on the Wellington waterfront that are relatively new and they're enduring quite significant losses, and right next door to those relatively new buildings are buildings that have been built in the 1930s and 40s, which aren't as badly damaged. And they're going, well, we didn't understand the risk. To your point, they are saying, well, is that across New Zealand as a whole? And the thing that does for me is saying, well, Christchurch does need to get in there and tell its story better, so that we can say, well, we're not the same as Wellington or the same as Auckland, and we're sufficiently aware of our risks that we can tell you about what we're doing differently to fulfil our obligation to reduce risk. So we are part of that national conversation, and I would take it a step further and bring it down to the importance of Christchurch needing to understand that we're also part of a region. And I'm looking at the recent Wellington project around understanding the economic resilience of their infrastructure, the impacts of infrastructure on their economy in a future earthquake, and how they've approached that. And that is a conversation I think that we can push into in the next few years around our importance as a city sitting in a region, and I think that's another dimension that's yet to be explored.
Thanks, Mike. Dion?
Yeah, I was kind of just going to ask a similar question around what was the overall view of the insurers on New Zealand, and particularly Christchurch. It's just wanted to flesh that out and see if there's, what their appetite is to continue, servicing risk in New Zealand.
Yeah, I mean, it's a good question, because the insurance market doesn't always work the way people think. So having relationships is really important, and having coverage is really important, and keeping that coverage. So in terms of our above ground infrastructure, we're probably over-insured in terms of what we believe our probable maximum loss to be. But it means we've got capacity, because we know we've got more assets coming on over the next 5 years. So we've taken quite a cautious approach. But as far as the insurance market goes, they like that, because they know what we're doing, they understand what we're doing, they understand we're being reasonably conservative. They have actually quite a positive view of Christchurch, and a lot of that is down to the work that we're doing, as well as the fact that we've rebuilt half of the city, and the buildings are to a very high standard. And they noticed from that Kaikoura earthquake that we didn't have any damage here, but Wellington did, and that made them really start to think what's going on there. They were very negative about Wellington, and we are seeing those conversations. They were unhappy at how the claims process was being handled from the Kaikoura earthquake. They're still getting claims now 2 years later, which are coming out of the blue. So that makes them very suspicious about what's going on. Obviously, the Central Library was shut down in Wellington recently, just, like that. So they are starting to look at New Zealand, and they're still happy to insure down here. There's still a lot of capacity in the insurance market, but they're starting to go, maybe we'll focus here, and we don't want to focus here. And obviously, Wellington residential homeowners are seeing their premiums rising, and that's an impact of that. And, that's a challenge. And I think this is the reality around how we rebuild our infrastructure, how we deal with our planning issues. is that it will start to bite at the other end, because the people insuring that risk, and remember the banks are involved here with mortgages, they will start to take a more proactive view in pushing from the other end to try and help people make better decisions. So yeah, I think that, you know, they like the fact that we actually went to see them and we sat down with them and we spent time with them, and a few of them, you know, got some stuff off their chest in terms of the losses they'd incurred during the earthquake. But they said, oh, it's the first time we've had an insured come to visit us at that level, because normally we go through brokers and insurers, reinsurers. We actually were talking to some of the underwriters at the end of the chain, and then they could ask us questions. What are you doing? Oh, that sounds pretty good. You're kind of onto it. That in itself provides a premium in terms of how they look at your pricing, because they think at least they're building smart, they're planning smart, and they're thinking about this issue in terms of asset management. So it was a really worthwhile trip for us, but it obviously raised issues for other areas of the country. Yeah, Glenn.
Thanks, Ray. My question, Mike, is over the 4.7 about the local government risk agency, which I understand LGNZ propose, and it is about that below ground cover. So where are we at? Because we had to bear that in mind. Do we have to hold back with that a bit, or?
I'll probably answer that because I'm on that steering group. So the local government risk agency steering group was set up in the last government, and the government had proposed a shift from the 60-40 under the civil defence scheme to an 80-20, where all councils were then responsible for the first 80% of any losses, and the government would come in and pick up the last 20%. So they were kind of pushing down the responsibility. To help with that, they were going to set up a local government risk agency, which would be a centralised centre of excellence for insurance. So they would actually help councils to insure properly. That hasn't gone anywhere, so that's kind of sitting somewhere on someone's desk. And nothing's happened in the last 2 years on that. But certainly the government got a little bit stung. Whether that's the right model, I don't know. But certainly, you know, we all need to be looking closely at risk and how we manage it.
Okay. Was the concept around brokerage as such, or it's more?
Not really, just making sure. I mean, again, it's like with a lot of services, a lot of the small councils just don't have the capacity.
Right.
So it's actually helping some of them out. And central government obviously takes the view, well, hold on, if we're going to be up for 60%, then it means these people might be a bit slack and might be relying on the government guarantee, which, to be fair, we are in terms of our underground infrastructure, because we've only got $500 million of coverage, and we're relying on that 60-40 scheme to cover the rest of it, which is quite a lot. So underground insurance is a real issue, which is where the ILS market comes in. Yanni?
Several questions. Thanks for the work that you've been doing on this. The first question is really trying to understand when we get to the point that the Mayor was making around decision-making around our facilities, around the level of resilience that we should be designing for. And I'm still sort of struggling to understand how that process is going to work, whether it's new facilities that we're building or existing facilities like Orion, and we retrospectively go in and make them resilient so that we can be self-insured effectively. Have you got any sense of when that broader conversation tying those sort of three things together that the Mayor talked about will happen?
Yeah, I mean, Mike can talk to some of the asset stuff. I mean, I would just say two things. One, again, the resolution is directing ELT to put that framework over the next LTP. But I think also, if we look at a lot of the repair and rebuilding that's being done to a very high standard. You know, there's been base isolation, there's been structural shifts, a lot of buildings are way above building code. So that has been built into that. In terms of probably your question about things like community facilities, I don't know, Mike, what's your view on that?
Sorry, but just to clarify, my understanding is we're still building to the MBS. We're not building for reuse after an event, which would be quite a significant change.
Yeah, it's different per building. You know, the private sector's, you know, putting in its own money. They're making sure they're building to make sure that there's reuse, the factor there.
David might want to respond.
For above ground infrastructure for buildings, so there is that tension where the market has been relying on the NBS as a proxy for resilience, And that's what the market's been doing, and the market is responding in terms of, well, we didn't realise that the losses would be so great because we thought the NBS was an appropriate sort of standard. Well, actually, the NBS is about building. Is about life safety and not about building. So, I mean, I don't know whether that's a conversation that I can take. I can really add to. But what I can say is that in terms of underground infrastructure, we are well positioned. We've got good design standards. We have got good construction standards. We're able to articulate all that, and we've got good developing good frameworks for investment in that space. So, I think from the underground infrastructure side, we are able to tell a good story to say, look, we're open for business. Right. Yeah, but the above ground one is a different story.
I guess some of us who have seen the reports around some of the skirt stuff would probably have a slightly concerned view about the state of our infrastructure with the design standard changes, the patch repairs. Does that give us any pause for consideration?
Well, I think this is to Raf's point earlier, particularly around the cost sharing arrangements, and whether we're talking 60-40 or 80-20, it's 80-40 and 80-20 and 60-40 of what? It's the conversation around the cost sharing isn't nuanced very well around betterment. Right. And I think that was one of the significant challenges around the issues you're talking about around skirt. So that could possibly be a conversation for, is that an insurable risk? Whether that's some sort of parametric type arrangement or I don't know. But one of the challenges that we will face as a city and as a country around another large natural disaster, if there are a lot of people going to the well, the central government well around the 60-40 or 80-20. You can bet your bottom dollar there isn't going to be a lot of appetite for that betterment conversation, and I think that is where an opportunity lies for around
just
transfer.
The final question I had is, I mean, although this is one part of this and we're asking for a broader risk and resilience framework, we already have a resilience strategy. Where's the reporting on that? How do we know that the actions in there are being delivered as part of this? Like, this would seem to be a subset of that, but we don't seem to have the overall reporting around that, unless I've missed it. So can I just get a sense of when do we get the next report on the resilience strategy and the implementation plan attached to it, and how does that relate to this?
You're right, and that is we haven't the vehicle for that was the previous strategic capability committee, and we reported into that, and now that last time was last year, so we haven't reported back since then, though we have been monitoring progress around implementation of the plan, and we will be coming back to the Innovation and Sustainable, the ISD, Innovation Sustainable Development Committee, to report on that. Though we are monitoring the plan and evaluating progress.
One of the things in that was, I thought quite interesting was around the non-profit sector, and certainly one of the requests I've had as local councillor, a number of those groups are struggling with the high cost of insurance now. So is that, in our facilities or community facilities, is that able to be part of that framework that we're doing, given the impact on our funding requests?
Yes, that definitely is an action. That is an action in the plan, and it is one that until now we've really been challenged to try and get that conversation going. But I think there is sufficient momentum now around risk transfer and insurance to start that conversation.
Cool, thanks. Any other questions? Okay, so we've got some resolutions here which request ELT to develop a broader risk and resilience framework for asset management as part of the 2021 long-term plan. So this is making it quite explicit that we want something to be recognised in here in terms of our asset management, which then will provide further information for the insurance market and ask ELT to explore alternatives to traditional insurance coverage, including the ILS market. So we're just elevating it because that conversation needs to happen at ELT, and you have to have different people from different areas having these discussions. So I'm happy to move that.
Would it be better to add a sort of an initial report back? I mean, even if it's with an update. I'm just worried about another resolution that doesn't have any reporting date. even if it's just for an update on where things are up to. I worry sometimes that that comes in too late for us to really properly assess what we're doing. It is such an important step forward that I kind of want to...
Yeah, well, I would imagine the next council will have this on their strategic agenda anyway, and will set a strategic program for reporting.
Well, how about request staff to provide an update to the incoming council to enable them to establish a...
the income council.
Yeah.
And I do think an update to the incoming council on the resilience strategy progress would be really good. Because there's a number of
It isn't a resilience strategy, it's the Greater Christchurch
Christchurch
Resilience Plan. They have been reporting regularly to the Greater Christchurch Partnership, and unfortunately there seems to have been a sort of a lack of direct reporting through to the council. So, but that's fine. It's a separate issue from this.
Right.
This is the framework for asset management.
Sure, but
I
things
think
like
there's a danger sometimes trying to pile too much into one place and then nothing happens, as opposed to being quite specific.
sure, but if you think about the big decisions that we're going to have to make, the resilience of the new stadium and the cost, I mean that's probably going to be the biggest decision that I can see coming up in the short term. The resilience plan did mention having some sort of regeneration project assessment tool, which may be quite useful. I mean, the stadium's probably the biggest thing.
There are
That
four
will be
elements
choice.
of the plan, as you know, and this isn't one of them.
Okay. All right, so are you happy with item 4? An update to the incoming council?
Yep.
Okay. All righty. Jimmy?
Only one question, particularly regarding to the paragraph 1. I'm not sure this report, whether just on here, or is a little bit a detailed report regarding to the, all the kind of the mayor, council, and also all the kind of chief resilience office and have overseas trip, This one kind of summary, so I didn't actually
No, I
see the
haven't presented my report yet.
or not yet?
No.
Okay, so this report is mainly focused on this report.
No, this is REF's report.
Okay,
It's the
it's
chair
not
of
a
the Finance
the
and
trip,
Finance.
yeah, because your particular mention the well presented to the
Separate, yes, I know.
separate international
Yes,
relation
I know,
working
but
group.
it's too late now.
I think the mayor's
Not to
doing
me,
a
we still
report.
have last meeting.
Yeah. Okay, I'm happy to move these resolutions, seconded by the mayor. Any discussion? I put the motion. All in favour say aye. Aye. Against, that's carried. Thanks very much.